Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name Careers Cloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this URL. And there will be option for home, all courses, my courses and down section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news. And this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend after reading the PDF, you can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI assistant mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI assistant mains. Similarly for SBI PO, RRB PO, clerk mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics. Today, we will be covering October 1st week banking and finance awareness news. Moving to the first news. The first news is about the reconstitution of the MPC, that is Monetary Policy Committee. The main aim of this Monetary Policy Committee is to curtail the inflation and also to promote the growth and price stability. This is the main focus of this Monetary Policy Committee, and recently this has been reconstituted. So if you see, on October 1st, 2024, the Government of India has revamped the Reserve Banks of India Monetary Policy Committee. So this MPC committee, it consists of 6 members. 3 members are from RBI and 3 members represent the Government of India. So now these 3 old members that represented the Government of India has been replaced. So if you see, it was previously Ashima Goyal, Shashank Bingde and Jayant R. Verma, and now these 3 members are replaced by 3 new members. They are Ram Singh, he is the director of the Delhi School of Economics. Then Saugata Bhattacharya, he is an esteemed economist and senior fellow at the Center for Policy Research. Then the last one is Nagesh Kumar, the director and the chief executive of the Institute for Studies in Industrial Development. So remember these 3 names, very important. These are the 3 new members of this Monetary Policy Committee. So if you see, these external members are appointed for a term of 4 years and with no provision for reappointment. So these old members, they have completed 4 years of service, and so that now these new members have been appointed in this Monetary Policy Committee. So when was this committee formed? It was formed in 2016. It was based on the Urjit Patel Committee. So Urjit Patel Committee has recommended for the formation of this MPC. So to enhance the transparency and accountability in this monetary policy. So the MPC's primary goal is to maintain price stability while considering the economic growth. That is, in order, it has to curtail the inflation and also ensure that the economy is growing. This is the main aim of this MPC. There are 6 members in the MPC and RBI governor is the chairperson. So 6 members, 3 from RBI and 3 from the government of India. So 3 members from the RBI, that is the governor, deputy governor and 1 officer to be nominated by the central board, and 3 were appointed by the government of India. So what is the purpose? They fix the inflation rate. So MPC is tasked with guiding India's inflation rate measured by consumer price index. So as of now, the target is 4% with plus or minus 2%. That is, it is between 2% to 6%. This is the inflation bandwidth. This means that while the goal is to maintain a 4% inflation rate, the committee allows for some flexibility, acknowledging that inflation can fluctuate. So rather than fixing a fixed interest rate, it has suggested of fixing a flexible interest rate. So the flexible interest rate is 2% to 6%. And also a new executive director has been appointed and his name is Avairan J. Next is the SEBI established FPI outreach cell for the seamless market access. You know that under the foreign investment, there are 2 types. One is the foreign direct and another one is the foreign portfolio investments. So these FPIs, they invest in the shares or the equities and the bonds. So they invest in the financial assets of the economy. So these FPI invest in the equities and the debenture or bonds that are issued in India. So now the SEBI has established a dedicated foreign portfolio investment outreach cell. So what is the focus of this, or what is the purpose of this? This is to provide guidance to the prospective FPIs during the pre-application stage, and also to help them during the onboarding phase and resolve any operational challenges that they may face. So main reason is to help them in the pre-application stage and also in the onboarding, and if at all if they face any operational challenges, that can also be solved in this FPI outreach cell. This is the purpose of this outreach cell. The next news is about SEBI. So SEBI has mandated that individual investors applying for amount up to 5 lakhs for acquiring debt securities through intermediaries like stockbrokers, they have to use only UPI to block funds. So in order to buy any debt security, you need to give money, right? So here the SEBI has told that if the debt security that you are wanting to buy is up to the amount of 5 lakhs, then the payment should be only via the UPI mode. That is only allowed from now onwards. So if you see, this will be applicable from 1st November 2024. So this is related to public issue of debt securities and the amount should be up to 5 lakhs and the payment mode should only be UPI. So if you see, this aim is to smoothen the process for public issue of debt securities, non-convertible redeemable preference shares, municipal debt securities and securitized debt instruments. So this application process will smoothen by the mandate. We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also, recently, you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this static banking awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon and then you'll be redirected to this page. In this, you have to go and click the static banking awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course. The next news is about SEBI introducing fixed price process for volunteer delisting. So when a private company wants itself to sell its shares to the public in order to raise funds, then that process is called listing. So it gets listed itself in the stock exchange. Similarly, when a public company wants to buy back its shares from the shareholders and get converted into a private company, then that process it undergoes, it is called as delisting. So it gets delisted from the stock exchange. So until now, if you see, there was reverse book building process in order to buy back the shares from the shareholders. And now currently the SEBI has introduced the fixed price process for the volunteer delisting. Now, what is this reverse book building and what is this fixed price? So in case of fixed price, the company will tell at what price it will buy back the share from the shareholders. Generally, it is 15% above the floor price. So if you see, the floor price will be calculated by the in respect to this delisting regulation. So with respect to this delisting regulation, this floor price will be calculated and the fixed price will be 15% above the floor price. So that will be the price at which the company will buy back the shares from the public. Similarly, in case of reverse book building, what happens is that the company will give a floor price. So they will tell that this is the floor price. Say it is 100 rupees. So you can bid the shares any amount above this 100. So some shareholders will bid for 105, some at 120. So you can bid the shares any amount above 100, which means that the shareholders are willing to sell at 105 rupees or at 120 rupees. So all the shareholders will bid their amount, which will be above this floor price, and after the closing of this bidding, the company will decide the price at which it will buy from the shareholders. So this is the process of reverse book building, and until now only this reverse book building was available in the delisting, and now the SEBI has introduced this fixed pricing process as well. So we see on September 25th, the SEBI has amended the delisting of equity shares regulation, which has now allowed companies to delist shares through a fixed price process as an alternative to the reverse book building process. So this reverse book building is basically a process used for efficient price discovery. So it is a mechanism where during the period for which the reverse book building is open, offers are collected from the shareholders at various prices which are above or equal to the floor price. Then the buyback price is determined after the offer closing date. So various prices will be provided by the shareholders, and then after the closing date, the buyback price will be determined from the bidding price. This is reverse book building. So now this fixed price process will be an alternative to the reverse book building process. So the new framework has specified that in case the acquirer has proposed delisting through a fixed price process, then the acquirer will provide a fixed delisting price which will be at minimum 15% above the floor price, which is calculated in terms of the regulation 19A of the delisting regulation. So you don't have to know how this price is calculated, but a floor price is calculated and a fixed delisting price which is 15% above the floor price is determined and is informed by the company to the shareholders. So SEBI has reduced the limit for delisting success under the reverse book building process from 90% to 75% of public shareholder participation. So if you see, under the reverse book building, at least 75% of the public shareholders should participate. So previously it was 90%. Since it's very huge, it has been reduced to 75%. Only if only 75% of the public shareholder participate, this will be a valid one. And also minimum 50% of the public shareholding has been tendered, which means at least 50% of the public shareholding, they should, that is the 50% of the public shareholders, they should accept or the offer given by the company, or they should be willing to sell their shares to the company. Only in that case, this will be a valid one. So even in case of issuing a share, this condition you would have seen. In case of issuing new shares on the listed stock exchange, at least 90% of the IPO should be subscribed. If this is not subscribed, then the company should return back the money to the shareholders. This is one of the conditions during listing process. Similarly, this is one condition during the delisting process. That is minimum 75% of public shareholding participation and minimum 50% of the public shareholding has been tendered. This is the condition. And also, SEBI has directed that the shares of the holding companies which gets delisted will be prohibited to seek relisting for a period of 3 years from the date of delisting. Suppose this year is 2024. So this year a company has delisted itself from the stock exchange. In that case, for the next 3 years, it cannot get relisted. That is, it cannot raise money from the public via the stock exchange. Only after 3 years, that is after 2027, that is from 2028 only, it can start listing process if it wants. So remember that it will take minimum 3 years. Only after that it can seek relisting process. Before that it is not allowed to relist itself on any stock exchange. So this is the new mandate or new feature that has been brought up by the SEBI. The next news is about developing a UPI-like payment system outside India. So NPCI International, this is an international arm of National Payment Corporation of India. This has entered into an agreement with Trinidad and Tobago country. So this will be the first Caribbean nation to adopt UPI system. So if you see, this NPCI International will help in developing UPI-like payment system in Trinidad and Tobago, which is a Caribbean nation country. So this will help in making a P2P, that is person to person and person to merchant transaction. So expanding the digital payments. So apart from Trinidad and Tobago, there are various other countries in which our UPI system is in practice already. So if you see, India can pay selected merchants in Bhutan, France, Mauritius, Nepal, Singapore, Sri Lanka and the UAE. And also in 2024, NIPL inked an agreement with the Central Bank of Peru and Bank of Namibia to develop a UPI-like payment system. So these are the various countries where UPI-like payment system is already in existence. The next news is about a launching of a travel card for the international travelers. So PNB National Bank, that is Punjab National Bank, has launched PNB Multi-Currency World Travel Card. So what is the purpose of this card? Here you can load foreign currency before leaving India. So in this, if you see, you can load currently 6 major foreign currencies, and those are dollars, euro, pound, Canadian dollar, Singapore dollar and dirham. So these are the 6 foreign currencies that can be loaded into this card. And if you see, the exchange rate will be fixed at the time of loading. So if you are loading today, then whatever the exchange rate today, that will be applicable. So even if you're going to use it after 10 days, whatever the time of loading that exchange rate is only applicable. So if you see, card offers the option to lock in exchange rates at the time of loading, helping travelers to avoid fluctuations in the currency rates. And where all can this be used? It can be used in the ATM, point of sale terminals, and also for the online transactions across the globe. And also along with it, an insurance coverage is provided, that is around 3.5 lakh is being provided for theft or misuse. So these are the various features of this travel card. The MD and CEO of PNB Bank is Atal Kumar Goyal and headquarters is in New Delhi. The tagline is the name you can bank upon. Next is about a scheme that's been launched by the IDBI Bank in order to recover the NPA from the borrowers. So if you see, the IDBI Bank has launched a one-time settlement scheme called the Sugam scheme. So this is aimed at recovering the non-performing retail loans. So this scheme is available to borrowers with outstanding principal between 10 lakhs and 10 crores that is classified as NPA as of March 31st, 2021. So as of March 31st, 2021, whichever loans have been classified as NPA and if their outstanding principal falls between 10 lakhs and 10 crores, then they can make use of this Sugam scheme. So what will happen in this Sugam or one-time settlement is that there will be some outstanding for that loan, right? So bank will tell that, okay, the outstanding is, suppose it is 12 lakhs. Then you pay only around 8 lakhs and we will settle this loan. We will close the NPA loan of your account. We will not call you again for any repayment. You once and all close this 8 lakhs, pay this 8 lakhs and close this NPA account. So this is what an OTS scheme offers. So if you see, the borrowers must pay at least 10% of the settlement amount by 31st December 2024 and with the balance to be paid within 90 days. So all payment must be completed by March 25, 2025. So the first 10% should be paid by December 2024 and the remaining amount should be paid by March 25, 2025 maximum, not more than that. So who are not eligible? So these are the following people, they are not eligible under this OTS scheme. So that is vendor bill discounting, vendor finance, corporate guarantees, or the cases that are under the National Company Law Tribunal and also which are under the Insolvency Bankruptcy Code. So these loans or these borrowers, they are not eligible under this OTS scheme. So the CEO of IDBI Bank is Rakesh Sharma and tagline is banking for all. The next news is about a loan that is provided to create 9 infrastructure projects in Mumbai. So if you see, the Mumbai Metropolitan Region Development Authority, that is MMRDA, has secured a loan of 31,673 crores from the Power Finance Corporation to fast track the development of 9 key infrastructure projects in the Mumbai Metropolitan Region. So this money will be used to develop 9 infrastructure projects in the Mumbai Metropolitan Region. So if you see, 80% of the money will be covered by the loan and the remaining 20% will be given by as government grants and also from the MMRDA. So 80% by loan and the remaining 20% from the government and from the MMRDA. So if you see, out of this 31,000, one of the major project is this Thane Borivali Twin Tunnel project. So Thane Borivali Twin Tunnel project, which costs around 15,000 crore, is one of the major projects among the 9 projects. The Power Finance Corporation Chairman and Managing Director is Parimandir Chopra. The next news is about the UPI autopay rule. So if you see, now there will not be any 24-hour pre-debit notification for these 2 UPI recurring payment. So previously, there was a 24-hour. So before a debit happens, 24 hours before the debit, there will be a notification. But now, if you see, recently in one of the Monetary Policy Committee, the RBI has told that there will be an auto replenishment option for this NCMC, that is National Common Mobility Card and the FASTag. Now, we know that NCMC card is mostly used in metro kind of public transport, and FASTag, it's been introduced by the NPCI. So this is used for toll collection. So while crossing the tolls, when you have to pay the toll money, using this FASTag, you can pay the toll money. So now if you see, what is this auto replenishment? So Suppose a customer sets a threshold. Say the threshold is set at 2000. So this means that if the balance of the FASTag or the NCMC, if it falls below 2000, then an auto replenishment will take place. So automatically money will be debited from your bank account and it will be credited to this FASTag and the NCMC account. This is the purpose of auto replenishment, and now this feature has been introduced to this FASTag and RuPay NCMC card. So this is in line with the RBI's directives, Statement on Development and Regulatory Policies, which introduces an e-mandate framework for the automatic balance top-ups in the FASTag and the RuPay NCMC. So this will allow for auto replenishment when the balance falls below a threshold set by the customer. So UPI members are instructed to remove the pre-debit notification validation for the UPI autopay execution related to these. So since you don't manually go and debit it, here automatic pre-debit happens, that is automatic replenishment happens. So there is no need of this pre-debit notification. The next is that REC Limited signed a 3 lakh crore financing agreement with the government of Rajasthan. So on 1st October 2024, REC Limited, which is a Maharatna company, it has signed an agreement with the government of Rajasthan to provide a financial support of 3 lakh crore to fund the infrastructure projects. So remember, it is REC and Rajasthan government, and the amount involved is 3 lakh crore. So how will this 3 lakh crore be provided? 50,000 crore per annum will be provided for up to 6 years, that is up to 2030. So the 3 lakh crore will be provided in a tenure of 6 years, and that is up to 2030. And this money will be used for power and non-power infrastructure projects. The MD and chairman is Vivek Kumar Devgan. Next is that US-based Development Finance Corporation. It has planned to invest amount around $272 million in India. So this is a US-based Development Finance Corporation. So if you see, these are the major investments. So around $40 million will be invested in APAC financial services. That money will be used to lend to low income and micro enterprises. Then another $50 million loan will be provided to the InCred Financial Services. That in turn money will be used to provide as a loan to the women-owned businesses. Next, another $15 million loans will be provided to the Northern Arc Investments. So this will invest in projects that is mostly green related projects. So green energy projects or renewable energy projects like solar energy, green building, sustainable architecture. So in these projects, the money will be invested. The last one is that $40 million will be given to Ergo Capital Limited. This in turn will provide money to the small and medium-sized enterprises. So these are the major loans where it will be put into use. Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact directly on this number. Thank you.